All right, and welcome back from the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So more or less a flattish to lower close on the weekly for the spider. So really just kind of a nothing burger, all things considered, and really everything that we talked about the last couple of weeks still remains the same. Again, we're just stuck in this range here for the most part on the SPY. And again, kind of the same things here going on. So again, really, if we look at the triple Qs, for instance, again, that actually started to make slightly new highs here. We are following this rising wedge pattern here. So the white trend line and the purple trend line, then you have the bigger kind of purple trend line there as well. But this range is getting very tight, and I think we're kind of running out of time really for this rally. It's just getting very tight here, getting very long in the tooth. And again, like we've said really, ad nauseum over the last couple of weeks, it's been a very thin rally. So, and what I mean by that is, breadth is terrible. We know that, it's not really a secret. Again, we look at the equal weight S&P and, still making lower highs since February versus the rest of the market. We've had, weakness in other key sectors like the transports, lower highs since February. Same thing with the semiconductors, lower highs since really late March. Not confirming the move with the NASDAQ. And you can also see a pretty good, as we have this rising wedge pattern here, there's also a pretty good RSI divergence on the triple Qs as well. And you can see that's also available there on the MACD. But in either case, I think we're kind of running out of time here. Market rally is getting a little long in the tooth. And the types of things that the Fed wants out of the market are kind of returning, right? Reckless speculation, things like Pepe coin, Gensler, those types of things here. It's getting to that point. I think that's kind of where we are in this kind of cycle here. It is starting to get complacent again. And again, it's a very thin rally. So we've talked about that many times here, but right now, to me, we are coming into an OPEX week. I think they may be able to keep the market held up a little bit until then. After then, I think we kind of come into more of a risk period overall. But again, markets here, and for the technicals, as far as that's concerned, nothing to say we can't trade up a little bit into this 330 handle. Again, there's a gap window at 326.84, and then the gap fill at 329. It's not that far away, and a lot of the time when you get a rising wedge like this, you can crack above the top side for a few days, and then you can kind of roll over from there. So, it's not to say that they can't keep the market held up. We did have some, I think some distribution this week. So we had, 4 days this week: Monday, Wednesday, Thursday, and Friday. We did put in kind of like, I would call them kind of like hammer candles, where if we look here on the intraday, you can see lots of selling in the morning, and then we kind of float back up in the afternoon. So maybe some distribution going on, and then in the afternoon, you're kind of seeing the light volume kind of retail and algos sort of just bid the market back up. Either way, I think we're getting kind of on our last legs here as far as this move is concerned before we have to come back down. But, right now we still have a decent pattern here. So we have the sell from last week, and then this week, or I should say on Friday of last week, we had the nice little pop, and then we just stayed inside of that really all week long. So nothing to say we can't have one more pop here. So you got an up move and then a continuation higher. That certainly could see that happening. I just think that the clock is kind of ticking here. It's been a long time. We've been stuck in this range for a very long time, and we have really nothing to show for it on either side. And I think market's going to have to pick a direction here pretty shortly. And to me, that direction is down. Again, just looking at the Qs here. Again, like I've been saying the last couple of weeks, it's really just 5 stocks here: Apple, Microsoft, Meta. Google had a nice pop this week. They mentioned AI, so of course they're bidding up here. Nvidia as well. This looks very tired to me though. But again, we're getting that the market leaders, and they can hold the market up. When they make up 25 to 50% of the index, that's all it really takes is those 5 stocks. But again, looking at the equal weight. By the way, speaking of weighting, Apple now, as of I believe Thursday or Friday, now has a bigger market cap than the entire Russell 2000. So again, this is not stuff that's healthy here. Again, we could talk about financials. Everybody's been talking about some of these banks: PacWest, USB, Western Alliance. These terrible charts here. The KRE is still in very rough shape here. it's going to be very hard for this market to sustain a rally without help from financials, without help from transports, without help from semiconductors, cloud software, all these other sectors that really are just underperforming, and not just by a little bit, but massively underperforming. So really, what the story is as soon as this market loses big tech, I think that's where the bottom falls out of it, and these things got to correct. I mean, you look at the evaluations of Nvidia and Apple. I understand that they're trading up right now because markets are looking for a safe haven, but it's almost a double-edged sword because just the fact that these are bidding up so much, they're pricing in basically 0% interest rates and they're pricing in no recession, right? That's what their forward PE is essentially priced in. We know that's not the case. We have 5% interest rates and we are going into a recession. We are at the front of it right now. It's like it is a safe haven because it's not going to go anywhere. Apple's the largest company. It's not going anywhere, but now their valuation is unsafe. So a little bit of a ironic situation there. But all things considered, again, once this market loses big tech, that's really going to be all she wrote, if you ask me. And I think that it's probably going to come here, I would say sooner rather than later. Again, this rally just very long in the tooth. And, we really haven't gone anywhere since late March. But, the market's held up because we got 5 stocks, doing all of the work. So anyway, let's get over here into some sectors as we always do. We'll start off, we talked about the Russell a minute, but we'll talk about that again. So just really a weak chart here, really all things considered. We had that bear wedge breakdown a few weeks ago, and then really in the bigger time frame, this is just a bigger picture. If we go to the monthly, it's such a bigger picture bear flag. And again, lots of regional banks in the Russell 2000. And, if we have another kind of washout there, this is going to go down very sharply. And again, the performance of the Russell 2000 is another kind of indicator of how bad breadth is right now. And again, just not a really good chart here. We're at the lows. We have not participated in the rally. Needless to say, there's lower highs here, but you almost made lower lows a week or two ago, and just not participating in the bounce here. So Russell 2000 on the weaker side, the diamond here via the Dow, that held the 331 area, so it's hanging in there okay for now, but again, still making kind of lower highs here, with the triple Qs making higher highs and the spider still holding up. So really 2 out of the 4 major indices are not acting that well. How much longer can that last? Well, it remains to be seen here. But either way, if you break this pivot here, it's probably headed to that 325 area. On the upside, I could see it getting up to 343, but that would probably be some type of a blow-off move. Same thing with the spiders. We'd be looking at that 420 area. Again, nothing has really changed there as far as that's concerned. And then again, right up to this double top or, 330 area on the triple Qs would be kind of your quote-unquote blow-off area if we were to get up there. Semiconductors, which we touched on here, again, ever since that trend line break, we had a nice bounce here, and you could make a case that you're kind of setting up kind of a up zigzag up. I'm just not sure I see that much upside with it. Again, semis not confirming new highs with the QQQ. You want to see the semis leading, and that hasn't been a good sign lately. If we take out this pivot, then all bets are off, and it's headed down to that 200 moving average. But for right now, we'll give it the upside bias, maybe to that 127 handle. You got a lot of pivots up in there, and then of course that upsloping trend line, which was broken a few weeks ago. Cloud software, that did act a little bit better this week. So for the last 2 or 3 weeks, this has been on the softer side. We got a nice bid in the middle of the week. And we had a little pullback candle, filled the gap on Friday, and then finished off the low. So this chart looks a little bit better than it did. Again, this was a market leader for a while, and then it became a laggard, and now it's back to, we'll just say it's doing average to above average right now. The weekly pattern here is still reasonably okay. I can't rule out another little nominal push up to that gap fill, and that would kind of coincide with what I was just saying about kind of a blow off move for the Dow to 343 or the spiders to 420. That's really the upside there for cloud software. But bottom line, the chart has improved a little bit since Wednesday of this week. Dow transports here, again, continuing to show weakness. We had the big dump there. UPS earnings were terrible, and that stock acted very poorly, and it has not rebounded very much either. And then we kind of came up here, and now we're curling over 1, 2, 3, 4, 5 days in a row. We were red this week, so really the whole week. The only positive right now is that you're holding this green bar low here at 13,742 on the weekly time frame. If you get a close below that, it's likely going to trigger this weekly head and shoulder pattern, which takes us a lot lower there. But for right now, the transports are hanging in there. And again, another kind of chart here where very similar to the triple Qs, tightening range, getting very, very, very tight up there. And now the transports here, they're kind of getting tight here. So you have these higher lows with this trend line and then the lower highs there. So again, range is kind of tightening here, and eventually we're going to have a big move. So that's kind of what I'm looking at right now. But again, transport's not confirming any sort of strength in any of the indices, which is a red flag. Bonds not doing a whole lot this week. ZT did sell off a little bit on Friday. That's the 2-year, the 10-year backed off as well, as did the 30-year. One thing that I find interesting about this week is the jobs data we got in the middle of the week, really on Thursday, PPI and the jobless claims. So those were both very cold prints. What's interesting to me is the dollar index actually rallied Thursday and Friday, whereas typically, if we look at, just go to the 10-year yield, that pulled back on Thursday and Friday. So the dollar started to kind of just ever so slightly diverge with the market. Typically when yields are down, the dollar has been down as well, but that changed a little bit on Thursday. Not so much on Friday, didn't quite get that follow through, but that could be a signal here that the recession is starting. We also saw precious metals, which we'll get into a little bit later, pull back towards the end of the week as the dollar was strong with bonds bidding. So if we look at, I'm just going to use the 30-year note, and we go to Thursday morning, this rallied right off of the jobs data and the PPI data. And if we look at the DXY, so this is right around the same time, the dollar rallied as well. So again, dollar rallying with bonds, definitely a sign of risk off. Didn't really see that follow through on Friday, but it could be a signal that the market is now recognizing that we are starting to be in an official recession here. So just a little thing to pay attention to there. We'll see if that continues into next week. Anyways, over to housing. So XHB held up pretty well, although it did back off the last 3 days of the week. ITB backed off on Friday, still holding trend, still very overvalued if you ask me. And I talked about this on my channel this week, but I do have some context in the construction business. Some of my own members actually were talking about this on my site earlier this week. Specifically in home building, and they're getting a massive drop off in orders. And a lot of the reason for this rally, their earnings are still good because their earnings, they're essentially from contracts that were priced in during ZIRP. And those contracts are rolling over now, and there's no buyers. Also, if you own a home right now, you're not going to be able to move. So, there's lots of things here. There's lots of headwinds coming on right now that the market's not really paying attention to yet because everything is still kind of on the up and up. I still think home builders are ridiculously overvalued, but for right now, they're holding up, so we'll respect them. VNQ still on the weak side. Nothing has happened here since late March, just in a holding pattern, which I do not like. Financials here, XLF down 41 basis points on Friday and really down most of the week. Not a strong chart. So the only thing you have going for it is you have higher lows right now, and that's really it. So you're below all 4 major moving averages. On the daily and the weekly, again, we closed below the 200-week moving average for the first time since late March. So again, we lost that 200-week moving average, and just not a strong chart here. Really, any way you look at it. Again, same thing with KRE. We've been talking about this pretty much every week here. Regionals and the big banks as well starting to slip. KBE as well. Again, here's your positive. You're above the 52-week low. That's really it. Outside of that, just ugly charts. Pretty much across the board. The broker dealers, XBD here, actually a little bit better. Not great, but we did get that big pop 2 Fridays ago, and then we just went inside all week long. So I could see this having a zigzag up. Again, maybe 445, 450 would be kind of your target if that happens. If not, and you take this pivot out, it's right down to 400. So, but broker dealers shaping up a little bit better here. But either way, still not a great chart in the big picture there. Over to energy here. So let's look at crude futures. So crude backed off a little bit here today, or I should say last week. It had a nice continuation Monday, Tuesday, and then pulled back Wednesday, Thursday, Friday. Still holding onto this $70 pivot. You don't want to see it lose, kind of this area here where it reversed. So right around 68, right in that range there. If it does, it's going to go back to the lows. And if you take out the lows, then this thing can go lower. But for right now, you could put in, we could come back down and let's just say we put in a little tail. we could, come down and trade back up to 76. I can't rule that out, but for right now, I'm a little more neutral on the chart, because it's just a little too premature. If we can put in like a tail candle, a test candle Monday in reverse, then I would give it the upside bias to 75, 76. But if not, and we start to take out that 67, 68 area, then it's back down to the lows here. So I'm not dealing with crude right now, but we'll have to see kind of how it trades early next week, which is an OpEx week too. So there may be a lot of game playing going on. So definitely don't discount that either. Anyways, XLE. So just hammering on this trend line one more time. If this breaks, it's going to be into correction mode. I think you have really good support down at the 70 to 72 area. A lot of these energy stocks, we've talked about this. Jason and I have probably towards the second half of the year, energy is going to be a very, very good trade. So if we can get a correction before then, and I've been rooting for a correction, hoping that we get a nice one. Hopefully we can get a little bit more. I think we get some really good opportunities in the second half of the year, maybe even as soon as quarter three, right towards the end of June. But we'll see. It's hanging onto this trend line. I would give it the upside bias to 82, 82.50 if it can get one more rally. If you break down, then you got to hold this pivot. Otherwise, it's down to that 72 handle. XOP, really the same thing, although a little bit on the weaker side. We'll give it the upside bias to 125, as long as it can hold these pivots. If not, then it's going to go much lower, I believe. And then OIH here holding onto the 250 level. This has got some support around the 232 area. And then through that, there's a big gap fill down here. But again, thought it would have gotten a little bit more of a bounce. Over the last week, but it did roll over here, and you're still below those moving averages. So I would like these to correct a little bit more. I know everybody's rooting for them to go higher, but I would like to get more of a correction here in energy, so we can position for maybe the second half of the year. But overall, OIH coming in as well. Nat gas bucking the trend a little bit, had a nice recovery. So last week it was on the weaker side. We had a nice little candle though on Friday, kind of a higher low. And then we came up here and we gap and go Monday, 1, 2, 3 pullback, and then a big pop on Friday. Rig count dropped by 17. That's a huge amount. So I think producers finally just had, they tried to say like, oh, we're going to keep producing. I think maybe shareholders finally just, maybe they had enough and that they started to say, okay, well, we got to start doing something here. But that was a headline on Friday, and it did push it up higher. So up 4% there on nat gas futures. You get above 230, then it's going to 250. You get above 250, it's going to 3. So pretty simple there. But we do have daily chart higher lows now on nat gas. So it is shaping up much better now. CCJ here over to the uranium. Got through that 28 handle and then went all the way up to 29. You see that area here where you tried to consolidate and then it broke down. That was going to be a resistance. If this can put in higher lows and consolidate, you can get through these. I do like the chart of CCJ here a little bit better than some of the other kind of uranium plays. You could also make a case that you got a little trend line right here. So there you go. So there's a trend line that we can watch now. If you can consolidate that, you can get one more push up into probably the 30, let's call it 30-50 area. So right up here, if you get through this area, but it's holding up well. It's got higher lows and no real problems here with the CCJ chart. URNM on the weaker side, but again, we talked about this. If this bear pattern here, so on the weekly, if that pattern fails, you get back above these moving averages, and especially if you take out this red bar at 34.22, URNM is going to go much higher. But right now, we tested it, we backed off. It's still kind of a bear pattern here, but if this changes that, it's going to go a lot higher because this is a bear pattern. If that bear pattern fails, you're going to be bullish. That's really as simple as that. But interesting dynamic there going on with URNM, and it tested the 200 and backed off. You could put in a higher low, you can keep going up. So ag this week, MOS, let's talk about this. This is into a very attractive area here. I really am rooting for it to get a little bit lower. I think there's a ton of support around 34, 34.50. Just take a look at the 200-week moving average. 618 going back to the pandemic lows to the recent high. So there's a lot of, and then here's where you broke out as well. So last pivot there, pivot high, previous high. I like MOS in this area. So I like this. I would like to get it a little bit lower. I'd love to see a pierce of that 200 moving average for, for a swing trade. For accumulation, I don't have a problem with it down here. And NTR, I think, already is into a really good level because you've already pierced that 200 moving average. And you have that pivot high there as well, previous all-time high, actually, even though this is only a, 4 or 5 year old equity. In addition, take a look what else you got. 618. So pretty much the same chart really as MOS, but I like this one right here. This is a very good area of support for NTR, and I would actually consider that as a buy, as a swing trade, as well as a longer term trade as well. So I like that one. I think Intrepid has to go a little bit lower though, right into this zone right here. So this is your green bar breakout. We'll zoom in on that. Up move, pull back, breakout. That's where the institutional money is sitting right here. These are your highs you couldn't get above, and then you broke out. So right into this 1450 to, we'll just say 14 to 17. So you get a IPI a little bit lower. That's your buy zone right there if we can get down there. But interesting stuff going on. I've been talking about this for a long time, right? I've been saying Mosaic, if we can get down into this area, that's where I really like it. It takes time, but there it is. So I like this setup here. DBC, that's that came in a little bit. You're still, holding these lows here on the weekly. So again, still have slight higher lows. I would like it around 22 though. So, right here, 22, $20 to $22. That's kind of going to be your buy zone on the DBC there. But obviously ag coming in a little bit there. And again, I do like those MOS and NTR charts. All right, let's get over to the dollar index, which you talked about. This got a nice pop on, I'm just going to go over to trading view here because we can get the full chart here. We got a nice pop Thursday, Friday, like we talked about. We closed above the 50-day moving average. The weekly still has a little work to do, though. I'd like a close above that 20-week moving average, and I would like a close above 102.80. So that's going to be this red bar, weekly red bar high. If you get a close above that, I think the dollar can go up to 106. If not, then I can't rule out another move down. And I would say we're probably going to get through 100 a little bit, maybe 99.50, somewhere in that area. But that's really what's going on with the dollar. But it did have a nice little 1-2 pop there. If it can consolidate, you can get some follow through. So the dollar shaped up a little bit better there. And we'll continue to watch that moving forward. Gold here obviously pulled back. Looks like it just closed below that 20 moving average on Friday. Nothing crazy though. We've closed below it a few times. I just think it's a little tired here and probably needs to do some more backing and filling. First level is probably going to be down to that 100 moving average, maybe the 1950 handle. So somewhere in that range here, but gold did back off a little bit this week, obviously with the dollar strength. Something here maybe is starting to make me feel like there may be something coming down the pipe with the banks. Maybe they're going to announce some program or something, because that could explain. Obviously gold has been up on fear lately, so that could be a little bit of an explanation behind that. Just a little theory to throw out there, but obviously gold week with a strong dollar. Silver got whacked Thursday, Friday. I think a lot of this may be options X related. Granted, we still have a week of OpEx, but sometimes you get that price action to start the Thursday before OpEx. Sometimes it just, it gets a little bit ahead of time. I think too many people just buying calls up here, honestly. And I've said this the last couple of weeks. It's had a nice pop, but you're up 30%. You're up 30% in 6 weeks. And going into resistance, you got to have a pullback. That's really all it is. 2350 should be good support on the weekly and daily. If you get through that, probably right around that 22 handle would be very good as well. But overall, silver, backing off pretty nicely. And here we put our lines back on there. You can see we basically just touched that previous trend line. So you got a nice test there. But, you had some good momentum behind that move. So that leads me to believe it probably wants to do a little bit more backing and filling. So nice move there for silver to the downside, but we'll see how that reacts later this week. And then platinum, pretty good sell there. That probably wants to go test, I would say, that 50-day moving average, and it's going to test 1030. So that was your last breakout there. So right in that 1020, 1030 area is probably where platinum wants to go. But it's a thin market, so it's harder to chart this one. But I still like this if it can do some more backing and filling. Again, if we look on the weekly, if you hold that green bar right here at 1050 spot 2 on a weekly close, this is technically still fine. I am intrigued here in the platinum chart. We had a nice little trend line breakout. We got back below it, but if you can consolidate, it can go higher. Palladium is also on my radar as well, as we talked about last week. I love this level on the bigger time frames. Big 618, from the 2008 low all the way to the all-time high. And then here is your big breakout. You retested that. I like it. So if this can get a bull pattern here on the daily and weekly, this can be, traded up to 1800. So I like palladium in here. I'm looking for a pattern on that. Then copper here, that finally got to 375. I've been talking about that probably since late January. And there it is. So we got all the way down to 370. And the reason it overshot is because you got a bear flag, right? You stayed inside bar. So when you consolidate, you can break, it's compressing energy to be released. So that's why you can overshoot. I would say right now there's really good support at 360 if it gets there. But we'll see what kind of pattern it puts in. It's holding support for right now, so we'll respect it. But that would be the next level there on the downside if we've got down there is that 360 handle. Okay, lastly, over to Bitcoin. So interesting stuff going on Bitcoin here. I'm doing this video Sunday at 3:45. And the Bitcoin chart, the weekly close is, well, the daily and weekly close is 8 p.m. today. So we'll be watching here. This triggered a head and shoulders this week, right? So there's your left shoulder, your head, and your right shoulder, and you triggered below that. The weekly chart, though, is still not terrible. Like you have an up move and you're still just kind of consolidating here. So we'll see if you get a weekly close below that trend line, it's probably gives it more validity, but we've seen them bail this out the last couple of weeks. Remember we had that move down and then it tried to bear flag and then it ripped up, and then we had that big dump and then it kind of ripped back up, and then we had another dump and it ripped up. So they've been saving it lately. The weekly chart is still okay, but if this pattern plays out, it probably takes you down to, I'll just draw it in for you. So it will take you down to right about here. So 23,000, okay? And that's going to coincide with that 200 moving average. So that's if it plays out. But again, the weekly is more dominant, so that can still win out. And if it does happen, it's going to have one more pop. But right now, I'd be a little bit more neutral on the chart. And again, speaking of crypto here, we talked about, Pepe coin and Gensler coin and stuff like that. This is what gives me the bear bias right now. The Fed wants the market lower, and the Fed doesn't want this kind of speculation in the market here. And again, we see a broadening pattern here on the SPY daily. It's usually a bearish reversal type pattern. We see a rising wedge on the daily of the Qs and weekly of the Qs with declining RSI. So you guys know my bias here. I still think we need to go lower, but it doesn't mean they can't hold the market up a little bit longer. If they keep the big tech game going, nothing to say it can't continue. But I just think I've seen these movies too many times. Breadth weak, fundamentals weak. I think it's just really a matter of time here. But again, we'll continue to respect the market as long as the volume remains light. They can keep this up a little bit longer. Anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.